you can decide on your own. Right. So I know this module is it's a big challenge to many. Yes, it is a challenge to many. You hear someone say, I'm writing for third time, fourth time, fifth time, and stuff like that. So I'm here to avoid such a thing from happening to you. If you've been writing it many times, it's okay. This is going to be your last year of you writing it. You are going to pass. If you were starting with it, doing it for the first time, so avoid doing it for the second, third time, and fourth time. So what do? Join the classes, and we assist you immediately. Right. So now, good people, this module is a costing module. I will tell you what to keep in mind throughout the whole semester for you to avoid problems, for you to avoid very big problems. This module is a costing module. So what do we mean? It is aimed at determining product costs. I tell you this from day one. I'm going to remind you as we move along, right? As we move along, I will still remind you this so that you are not going to forget or off ramp. If you keep in mind what the module is all about, then it makes your life very easy. Whenever I get lost, you are saying, why do we have this module to start with? It's the product costing. So is this a product cost or it's not? All right, I wasn't sharing anything. I'm just starting to share now. All right. So this module, it's MAC2601. Is to do with product costing. We don't look at service costing. No. So it being a product costing module, it looks at determining product costs. Right? So it is going to be product costing, I can say, and management. So that allows us to also determine what profit or loss, but that comes last. That should not be taken as primary. So we'll talk about that as we go towards the end there. Then it says, oh, we also do calculate profit here. So determining product cost. So if you are looking at this module, good people, you should know how to determine product cost. That is to start with. So in determining product cost, okay, what is a product? A product could be anything what we call a cost object, product cost. So the other name for a product in accounting, in MAC, you call it a cost object. So later on, they will define for you what is a cost object. Okay, so that's what you teach a person. Like for instance, here in this case that we don't have much time. If I'm to teach you MAC, I'll just teach you about the core basis of the module, which is to determine product costs. Thereafter, we can add other things, shall be added. Okay, so now, good people, in determining product cost, we must know the costs that form part of the product. So the issue there would be, what are product costs? What are product costs? What makes up the product cost? Right. So what makes up the product cost, good people? It's very simple. A product is anything. Think about anything. Think about a car, a glass, computer that is in front of you, your phone. All those are products in MAC, isn't it? They are manufactured. And in manufacturing them, costs are incurred. And because they are manufactured for sale, we have to know how much we incurred in making those products so that we can determine for how much are we going to sell them. Because failure to determine the product cost, you are likely not to sell your product profitably. You are likely to sell it maybe at a loss and still believe you're making a profit. You continue making that error, it's going to catch up with you. You eventually close down your business operations because the venture is not profitable. Why is the venture not profitable? You failed to determine the product cost. You failed on the pricing side. Okay. So, right. So let's look at product costs. When costing a product, good people, the cost accountant will determine the following. they will say that now, what is the direct material that we used here? In direct material, this is the material, you don't have to write, we are going to look at this now in detail. Direct material, this is the material that forms the core part of the product. It can be touched and felt. The table that is before you is a product, it was manufactured by someone determined the product cost of that table of yours so that they can price it, how much they should sell it for you in order for them to make a profit. Right, so now in the case of a table there, what is direct material? Direct material is the material that forms part of the product and can be touched and felt. In the case of your desk there, that wood that you can touch and feel, those frames that you can touch and feel are referred to as direct material. So the cost accountant is going to say now, how much did these material cost us that we used in the making of the table? You put them down like that. Product costing is done for pricing purposes. In the case of your phone there, whatever you're seeing, whatever you're touching there forms the direct material of that phone, that rubber, etc. At some point in time, a cost accountant has to determine the cost of that particular rubber for the purposes of arriving at the cost of the product. Right, the next thing, it is going to be the direct labor. With direct labor now, we are saying this is the cost that we incurred as wages to the factory workers, to the people who did the manufacturing of that particular product, directly involved, right? These are the wages that are paid to people who are directly involved in the manufacturing process. The ones that are involved in the case of your table, we are talking about the carpenter who is involved in the cutting and chopping of that wood, designing it, crafting it in the making of the table. Their wages, how much do we pay for each table? Remember, it might not be a direct wage like a piecemeal to say, okay, we are going to pay you per table. It might be we are paying you per hour. So in order to determine the direct material, the direct labor for the manufacturing of that table of yours, we are simply going to say, how long did the carpenter work on this table? 2 hours. Multiply by how much are we paying our carpenters per hour? 100 Rand. 2 hours times 100 Rand, 200. So the direct labor cost for this table is 200 Rand. The cost accountant accumulates that cost. Right. The next thing now that forms part of the cost also, it is going to be your manufacturing overheads. Manufacturing overheads. When you talk about manufacturing overheads now, we are referring to any product cost which is not direct material, which is not a direct labor. Right, for instance, the glue and the screws for that table of yours, those are manufacturing overheads, right? They are material kind of, but can we say direct material? Can they be touched and felt? No. So then where or how do we classify them as manufacturing overheads? And also, we have got things like what? Factory rent, right? The rent in which the manufacturing is taking place there. It is neither a direct material nor a direct labor, therefore it falls in the ambit of manufacturing overheads. So there are 3 product costs for people. If someone say, what are the costs that makes up the cost of the product? You tell them 3, direct material, direct labor, and manufacturing overheads. And if you're able to explain that, then you are done with your part. But now, our manufacturing overheads, good people, are split into 2. We have got the variable ones, variable manufacturing overheads, and we have got the fixed manufacturing overheads. Right. So those ones, yes, it's the classification, but overall, we say that now there are only 2, 3 product costs, which are those that I gave you. Then here you can have your product cost at the end. This becomes your product cost. Right, this module, good people, is to do with costing of products. It is to do with cost accumulation. That's why we talk about cost accumulation on the first day, so that it syncs with you. Because normally the things that we hear first day are the ones that are going to sync with you. Okay, I've given you the product cost. Right. So these are the costs now. Now, variable manufacturing overheads. These ones, they vary with the number of units produced. Fixed manufacturing overheads, these ones remain the same regardless of the level of output. Now, what becomes interesting here now is for variable overheads, they vary, right, with the number of number of units produced. So you need to know how many of that do we incur for each table, for instance. But when it comes to fixed manufacturing overheads, I'll put it in red there because it also becomes the backbone of this module. The fixed manufacturing overheads, right, depending on the costing basis. If you are using the traditional costing, they are applied, but we'll talk about the traditional and all other things there later. So these ones, for now, I can say they are applied. Fixed manufacturing overheads are applied using an appropriate basis. That's when those that have done this module before, we are going to talk about the overhead absorption rate, etc. Right, I've introduced you to the module, which is to do with a cost accumulation. That becomes key. Carry this with you as we move along. Right. So having said that, I can then now take you through your syllabus. I'm going to do learning unit number 1 for the purposes of this free class. I'll take you through learning unit number 1. I'm going to be explaining some concepts there. Right. But now, this being MAC, we look at all the costs, right? We look at both the manufacturing costs as well as the non-manufacturing costs. I want you to understand this thing, good people. When I say this cost is a manufacturing cost, I am saying that it is incurred in the manufacturing process. It is incurred in the factory. So manufacturing cost, good people, we are referring to what? To product cost. And non-manufacturing cost, we are referring to any other business cost that is incurred by the business, but it is not incurred in the factory. It is not manufacturing related, e.g. admin rent. There's no manufacturing that takes place in the administration building, e.g. CEO salary. This guy will never cut or bend anything, so we can't classify his salary as a manufacturing cost. We have got the secretary salaries, another expense that is incurred, people, and is not related to the manufacturing process. We call it a non-manufacturing cost. But don't write that one. I'll have to show you where it is in the study guide so that now, whenever you get stuck, then you can always refer. So I'm going to take learning unit number 1. Is the one that I'm going to explain for the purposes of this class. I will take you through everything that you need there. It's key. That one it is put as learning unit number 1 for a reason. For a reason. All right, so now take out your study guide, good people. I have to take you through this topic of yours for your understanding. If you haven't received the study guide, don't worry. At the end of the class, I am going to share it. I will share it with you guys. I need to sharing it now. Why is it taking time to deliver here? All right, so there is our first topic. So MAC, good people, it is interlinked there. What we learn now, you use it for subsequent topics. So if you can simply jump and try, let me rush for calculations. I know calculations won't stress me. You even fail to do the calculations there because you lack the what? The theory behind. Right. This is your topic number 1. Welcome to the difficult module, MAC2601. What did I do here? Oh, how come I'm showing everything here? Did I really? Am I showing what I need to be showing? All right. Right, this is your topic number 1, the learning unit number 1 for people. So here they talk about the cost. I have to explain all that table. By the end of this class, you must be knowing what's happening there. Right. On the left, they say assignment of cost to cost objects. We've got direct cost, and we've got indirect cost. Later on, we'll define what is what. Right. And then we've got cost classification. So I want to start with the main one. This one. Right. This looks at the classification of costs in general. Is not only looking at the classification of what? Of product cost. Okay. So now I'll tell you there that now what the management accountant does. Right. A management accountant, of which I hope you aspire to be one. Management accounting, good people, is about what? Management of costs. So what is in the mind of a management accountant there, whatever he's thinking there, is to do with costs. He's always thinking about cost management, cost. How do we reduce costs? How do we cut costs? How do we do this? So in order for you to do anything as far as the costs are concerned, you need to understand your cost. So if a management accountant, because he's cost-driven, looks at a company like this, right? Looks at a company like this, he sees 2 costs there. Those that originate from the factory, where manufacturing takes place. Remember, this module is going to look at a manufacturing entity. But don't say, what if it's a service industry? No, it looks at a manufacturing entity. And he's seeing the admin. Initially, before we can break it down to smaller details, when this guy, the management accountant, we're not talking about the financial accountant, the one that deals with historic information, he's going to see 2 things. He's seeing a factory and admin building. Admin building, that's where the administration takes place, right? And then the factory, that's where the manufacturing takes place. So the factory is going to give birth to product costs. The factory is going to give birth to manufacturing costs. And the admin building shall give birth to non-manufacturing costs, and costs which are not product cost related. Now, these costs that are clouding the management accountant's mind can be classified. So that then takes us to classification of costs. Classification of costs. We are looking at the costs for the business. How do we classify them? They can be grouped. Now, if you look at your tutorial later now, they tell you how we classify them. The first classification, according to their nature or origin. That's the class number 1. Number 1, according to their nature or origin. Okay, that's the criteria for classifying cost by management accountants. Right, now what do we mean by nature or origin? Origin, these are the roots. If these costs emanate from the factory, the management accountant is going to say these are manufacturing costs. Because in the factory, what happens? It's manufacturing. Remember how I said the management accountant views an entity. If these costs emanate from the admin building, where there's no manufacturing take place, only the administration. No manufacturing is taking place in the admin, so the management accountant is going to classify those costs that come from the admin side as non-manufacturing costs. So these non-manufacturing costs, good people, they bring little business, maybe except for the marketing cost. Yes, that one, because it generates business, we can consider it that way. Are we clear there? So now, here's the thing. This admin building, they normally bring little business. That's why if a company is downsizing, they start by entering the admin building and say, who is not adding value here? You should go. Right. So now, if you are going to classify a cost according to their origin or nature, you are going to classify them as either manufacturing cost or non-manufacturing costs. This that I was using here, factory building, it was there to act as a mind map so that you understand what is going on. What do we mean by origin, roots, in nature? Is it a manufacturing cost or non-manufacturing? Origin, does it emanate from the factory or from the admin side? Right. Then we pick again, we can further go explain now what a manufacturing cost is. A manufacturing cost is a what? Is also referred to as a product cost, as a factory cost, as a production cost. These are also referred to as a product cost, production cost, factory costs, also, okay, like I said, also a manufacturing cost. Right. There is a further dichotomy of the manufacturing cost, right? The manufacturing cost can further be divided into
Connie, ek moet nie luister, anders gaan mama pluk. Wat is dit?
Can further be dichotomized into
Nee,
direct
weer geld betaal.
costs, indirect costs. That's a subsequent dichotomy of those particular costs. Right, indirect cost, a good example of a direct cost, good people. We have got direct labor. Remember, manufacturing costs are also referred to as the product cost. They're incurred in the production. Direct labor, direct material, and variable manufacturing overheads. Remember, variable manufacturing overheads. And now indirect cost, good people, we are looking at things like indirect material, indirect labor, and fixed manufacturing overheads. Fixed manufacturing overheads. That's what we call your factory costs, right? Or your manufacturing cost, or your product costs. If further dichotomize. Direct costs, this can be traced directly to the product being manufactured, e.g. the wages of direct labor, those involved in the actual manufacturing. Direct material, this is the material that forms the core part of the product, can be touched and felt, which in the case of a desk, that would, those frames. Variable manufacturing overheads, right? These variable manufacturing overheads, right? We say that now, it can form things like your screws and clothes, right? They increase the number of units manufactured there, but they are not either direct labor or manufacturing or direct labor or in the direct material. Now we come to indirect cost. They are also incurred there. Indirect material. Now, when it comes to things like screws and glue, it's a matter of debate. One can say it's a manufacturing overhead. In that, you need more screws and glues as you make more desks. Or one might say, if maybe they are difficult to count, we can simply say it's indirect material. We know they are there, but we cannot directly trace them. Indirect labor, e.g., this is indirect labor incurred in the factory, but paid for the people who are not directly involved in the manufacturing process, right? For instance, the wages of a supervisor. A supervisor is not directly involved in the manufacturing process. He's not going to do the cutting and bending of anything. He oversees the manufacturing process. We won't say, how long did the supervisor spend in supervising the person who was making this desk? No. So that's why the wages for a supervisor are classified as indirect labor. Yes, he's involved in the manufacturing process, but not directly. Then we have got fixed manufacturing overheads. There are some manufacturing costs that are incurred in the factory, but they do not vary with the level of output, such as factory rent. Your rent for the factory will be fixed throughout the period, such as depreciation for factory equipment. Not just depreciation, but for factory equipment. The one that is used in the factory shall be given a list, and you will be required to say what type of a cost is this. All right. So I'm done with this one, the explanation for this one. And I've given you the other names. Now let's jump to the other side. The admin cost, which we call non-manufacturing cost. Non-manufacturing costs. So what are non-manufacturing costs? These costs are not incurred in the manufacturing process. That's the truth. Not incurred in the manufacturing process. Okay, someone is calling me. Maybe they are trying to log in. Let me assist them. Sorry. Okay, order. All right. Hey, sorry about that interruption there. This Zoom thing is still causing havoc to people. But anyway, all right. I was now on manufacturing cost. I was now on manufacturing costs. The cost or non-manufacturing, the ones that are not incurred in the factory. These ones not incurred in the factory. In the factory, right, can be classified as two. Can be classified as one, marketing costs, two, admin cost, administration cost. These are non-manufacturing costs, right? Yes, nothing happens in the admin building there. Non-manufacturing costs. It's important for the cost accountant to understand costs so that he can tell which cost can I cut and make the business profitable. Right, if you want to increase profitability, obviously, you normally start by cutting the non-manufacturing cost there. You can't cut the production cost there. There will be no goods to be sold. All right, marketing cost, these are costs for selling goods involved in the selling of products or sales commission, sales, salaries, and distribution. Then you've got the administration cost. If you want to picture administration cost, most of you, they're actually working in the admin buildings there. Any cost incurred without that building, within that building, it is a non-manufacturing cost, etc. All right. So I'm done with the first classification there. I've explained to you that the cost can be classified as either manufacturing and non-manufacturing. And under each, you must know what is entailed. You must know what is entailed. All right. Okay, so this, what we see here is the classification of the manufacturing cost according to their components. classification of manufacturing cost according to their components. This is what you are seeing here. We have said it's a manufacturing cost, then I came there. Or I can simply say what now, but this is not a separate classification altogether, but let me go back to the classification of manufacturing cost. It's no longer cost now. Manufacturing cost according to their components. We are mainly interested in the manufacturing cost, good people, because we'll be costing products, not costing services there. Right. Now, if you are going to be classifying further, dichotomizing your manufacturing cost into their components, you will have this classification. You will have your direct material, direct labor, variable manufacturing overheads, and you will have your fixed manufacturing overheads. So now you need to know the definition of each there. Are we together? So that when you're costing your product, you can say, okay, this is the direct cost, this is the direct labor, this is direct material, direct labor, the variable manufacturing overheads, and stuff like that. I want to take you through the book definition of these costs for your clarity and for your understanding. For your clarity and understanding there. Okay. For your clarity and understanding. Okay, a lot of people are now waiting outside there. Right. Okay. For your clarity, we have got the origin now. I've done that one. And then the further split of the dichotomy is the manufacturing cost classification according to their components. And these are the components, good people, that I've explained. And I'm going to explain again so that when we do questions, no one is going to give me stress to say, hey, which cost is this, direct or what? Right. So direct material quickly. It is direct material, all material that can be identified as forming part of the individual finished product and can be included directly in the calculating the cost of the product. That's your direct material. For example, the wood for your desk. An example, the wood required to manufacture a pencil is a direct material. Then I've got direct labor. Direct labor is the work needed to convert direct material into individual finished goods or products. These are the wages that we pay to the people who are involved in the manufacturing process. In the case of a desk, the carpenter. Supervisor, no, is not directly involved in the conversion. He just oversees. Right, then we have got the manufacturing overheads. Manufacturing overheads, remember I said we have got the direct, we have variable, and the ones that are direct. And here are the definition. Indirect material, for example, a material that cannot be linked to a specific individual product because it is used for all products, e.g. machine oil. It is indirect material used up in the production. It cannot be pointed to the product being manufactured rather than for a specific product, is it? They apply to the products universally. Your screws also. It may also include smaller items of material where it is not cost effective to trace the cost to individual products, e.g. the nails, the glues, the screws, and the staples. We know they exist, but we cannot trust them to the product in question. Fine. Indirect labor now. What is it? Cost include the wages or salaries of all employees who do not work on the product itself, that individual product itself, but who assist in the manufacturing process. Supervise. Right. Other manufacturing costs, I hope they split them into fixed and variable. Other manufacturing costs, they are also incurred in the factory. They are not direct material, they are not direct labor, they are not indirect material, they are not indirect labor. So what are they? Include costs such as rent for the factory, depreciation of machinery, electricity used in the production process, maintenance and repairs on the factory equipment, and insurance on the factory building. Normally, these are of a fixed nature. Okay, right. So you have now understood the further split or components of manufacturing cost We run with the manufacturing cost because these are key to our module. We will be slowly dropping the non-manufacturing cost. All right. So now, these costs also, they say that now they can be grouped into prime and conversion cost. This cost, see, I drew them here. There's a summary of those costs there. They say that they can further be grouped into prime cost and conversion cost. Now, these two, direct labor and direct labor, sorry, direct material and direct labor, collectively, they are referred to as the prime cost, the sum of those two. If I simply add direct material and direct labor, what do I get? I get prime cost. Okay. I get prime cost there. Then we go to the other side. If I take these two, remember we say these are manufacturing overheads. Manufacturing overheads. If I take my direct labor and my manufacturing overheads, I get conversion costs. These are the costs incurred to convert direct material into a finished product. Now, in the exam, they can give you a whole list of costs, a marathon of costs. Then they say calculate prime cost. You need to go and tick direct labor and direct material. Collectively together, they form part of prime cost. A question can also come and say, calculate the conversion costs. What do you do? Go and tick direct labor and your overheads. Overheads, remember, you can have variable manufacturing overheads as well as fixed manufacturing overheads. Tick them, then you work out the conversion cost in question. So I hope so far, so good. I don't know if we need some little bit of calculations. Yes, we might need some calculation to just welcome you there and there. Right. Cost classification by nature, they give us an example, then they say calculate the following. We have direct material, we have direct labor, we have manufacturing overheads. They ask us to calculate the following. Simple. They say prime cost. Now you take a step back and say, what comprise prime cost? Did we do it in class? Yes. Prime cost is equal to direct material plus direct labor. So to answer that question, I will come here and say is equal to direct material 250K plus direct labor 150K. Total, I think is 400. Okay. Right, conversion cost. Conversion cost. Did we do it in class? You take a mini step back there and say, okay, what comprise of conversion cost? Conversion cost is equal to direct labor plus manufacturing overheads, which is equal to, these are the costs to convert, right, is to transform from one state to the next. So conversion costs, these are the costs that I needed to transform direct material into a finished product. So you come here, good people, and simply say direct material, direct labor, 150 plus 400K, which gives us 550K. All right. Then they say total manufacturing cost, right? Total manufacturing cost, this is the sum of all the costs incurred. And don't make a mistake. Total manufacturing cost, good people, it's not prime cost plus conversion cost. You'll be double counting because in your prime cost, direct labor is there. In your conversion cost, direct labor is there. So if I'm to calculate my total cost as the sum of the two there, I'll be double counting direct labor, right? So total manufacturing cost is simple your product cost. And what comprises your product cost? It is direct material, direct labor, and manufacturing overheads. So there is the sum. It's an amount of 800,000. Right. So these are the basics that we are actually going through understanding this, good people, the classification of costs. Right. So we are done, the one for the nature there, and you can draw some mind map as to how it goes. So nature or origin, we are done. We move on to another classification of cost according to their behavior. The next classification is classification of costs according to their behavior. Right. So when we say according to their behavior, we are saying, how do they behave as a result of change in output? Right. How do these costs react as a result in change in output? How the costs behave, right? As a result of what can be change in output or over a period. So the way the costs react to that will determine the type of cost. All right. Now, for instance, through passage of time, other costs will remain the same. Things like your factory rent. So we'll call them fixed costs. And some costs can increase or decrease due to a change in output. If a cost is going to react to a change in output, we shall call it a variable cost. So now the cutoff for behavior, the main one, if the classification according to behavior, the classification according to behavior is that some costs will be fixed, meaning that they remain the same. Remain the same as output changes or over time, over a passage of time, they still remain the same. Your rent, for instance, as an individual is a fixed cost, right? It doesn't change. But your cost for groceries, it can change depending on how many things you bought for that month. Right, then we have got the variable cost could be variable cost. So this is the main distinction of costs that are going to, this is the main distinction of our classification of cost according to their behavior. So now if we say a cost is variable, we say that now it changes due to changes in output. As output changes, this cost will change. It will react and respond accordingly. Right? It react and respond accordingly. So direct costs are variable costs. Are variable cost. Right, direct costs, all those direct costs that you can think of, direct material, direct labor, are variable costs. Because now, if you are to make more desks, you incur a lot of expenditure in the form of direct material acquisition, in the form of wages paid to the carpenters. So they respond, they react to the changes in output. But as for the fixed costs, irregardless of the changes in output, they stay the same. So understand that classification according to behavior. And then we have got other classifications like semi-variable and semi-fixed costs. Semi-variable costs and semi-fixed costs. This is another distinguishing criteria for our variable costs. For our costs, right? So now it is important that we understand these costs as cost accountants today, because we want to treat them, we want to determine how can we cut them. Is it possible to reduce this cost? If it's a fixed cost, it's an unavoidable cost. There's nothing I can do about it. I increase output, I decrease output, nothing will change. But if it's a cost in question is a variable cost, I can do something about it. If I reduce output, that cost will go down. Same applies to you in your everyday planning. Put down your cost, have a look at them. Is there anything I can do about this cost? If it's nothing, it's a fixed cost, it's an unavoidable cost, you know that there's nothing you can do. If it's a variable cost, you know that this one I can do something, maybe like, for instance, a grocery. You'll be saying, okay, if I cut down my grocery, I would save. But I can't cut down on things like rent. All right, let me take you through now the definition of these things for your understanding, because these terms will follow us. If they are not well explained from the onset, going forward, instead of facing maybe the challenge that will be that will be before us, you will hear someone say, what is a variable cost to start with? Right, here's their book definition there. Know where to get it in case they ask you. Now that you're writing from home, simply come and get it here. Fixed cost. Fixed cost is a cost that remains constant in total, regardless of changes in the level of activity or volume within the relevant range and in a specific time frame. So there's a mention of within the relevant range. Right, what is the relevant range? Irrelevant range, this is the normal output level. This is an output level normally within which an entity operates. I will need to go to that one because you will see now what will trigger a stepped fixed cost. This is the relevant range. Irrelevant range, the relevant range is normally defined as the production capacity in units within which the entity normally operates. So these fixed costs, good people, they will stay the same within the relevant range. Right, let me explain. Let me give an example to that one. Let's say an entity normally produces 10,000 to 15,000 units, or let's say between 0, and is able and has got capacity to store these units so produced in the warehouse. Right, that's the relevant range. That's what they normally do. So it can happen that in 1 month, so it means that, for instance, the rent that they incur for keeping these units maybe is 10,000. Their warehouse has got a capacity of keeping those 15,000 units. Now, if they produce beyond the relevant range, problems are going to arise. If this is the rent for that factory space, for that warehouse, it will be fixed. If you're operating, as long as you're operating within that relevant range, you incur 10,000. Problems are going to be triggered. For instance, if there's a production output of 17,000, it's no longer within the relevant range. So it means that now we've got extra units produced amounting to 2,000 that we cannot house in our factory warehouse, which we are paying rent for 10,000. It means that now we have gone beyond our relevant range. Now we will need extra factory, we will need to incur an extra warehouse cost to house the additional 2,000 units produced beyond the relevant range. Right, so I'm trying to kill that mentality of saying if fixed cost, it's fixed, it's fixed, it's fixed. Yes, it's fixed, but sometimes that cost in question can be pushed beyond limits and then it increases a bit. Right, so as long as you're operating within your relevant range, good people, the fixed cost will remain fixed. But if you go and produce beyond the relevant range, problems arise. This rental expense, which we are saying is fixed at 10, can increase a bit because now we have got the extra 2,000 units that you need to house. So what do? You might need to add an additional warehouse space. What do? You might need to go and get these units being held by those, what do we call them? Those, I've forgotten these people who run the warehouse. You can have to go and list them there, have them kept there, and thereby incurring an additional cost. Right, the concept of the fixed cost is explained. I'm not going to assume that you did 1501, so you know this. I'm going to explain from 0. All right, so there is the issue. Fine, what about variable cost? A variable cost, good people, they vary in total. These are costs that are going to increase with an increase in total. But at product level, it stays the same. I'll give you an example before we go there. Let's say the direct material cost is 40 Rand per unit. If we make 1,000 units, our direct material cost for 1,000 units will be equal to 40 times 1,000. Our direct material cost for 50 units is going to be 50. It's going to be 40. I want to show you something there so that now when it's explained, it's going to make sense. This will be total direct material cost. The total direct material cost for 2,000 units, 40 times 2,000. The total direct material cost for 3,000 units is going to be 40 per unit times 3,000 units. The amounts are changing there. 40,000, 80,000, 120,000. So what is changing is the total variable cost. Remember, we said I'm a variable cost. Direct labor is a variable cost because it changes with the change in output. What changes now, a variable cost definition, is that this is a cost that increases in total, or this is a cost that changes in total as a result of change in the number of units produced. What is changing is the total. But at unit level, the cost per unit, it stays the same. Multiple choice can throw you out when it comes to this. The cost per unit, it is the same. What is varying is the total. Now let's go to the definition then. Variable cost is a cost that varies in total. You see, they put it in italics there. You see it in your assignment. Is a cost that varies in total in direct proportion to changes in the level of output or activity. As a result of changes in output or activity. You see that now, this is the volume. As the volume increases, this cost is increasing. I don't want us to explain these things in a general sense. Right. So I want you to understand these things so that we can explain them. Right, in direct proportion now, it moves with the changes. If there's an increase, it will increase. If there's decrease, it's decreasing. Right, the variable cost per unit is constant within the relevant range. We see that now per unit, it's the same. What is changing now is the total variable cost. As output increases, this cost will increase. As output decreases, this cost will decrease. So why are we here? We're talking about the classification of cost according to behavior, and we're getting to understand the difference between the fixed cost and the variable cost. Right, now let's go to the other secondary behavior classification, like the issue of semi. This semi-variable cost and semi-fixed cost. Now I want you to take note that now, when they defined the fixed cost, there was a mention of within the relevant range. When they defined the variable cost again, there was a mention of within the relevant range. If you are operating within a set range that you normally operate in, this cost will behave in that manner. Once you go beyond, there might be some alteration. And that going beyond the relevant range might trigger the issue of what? Of this semi-variable cost and semi-fixed cost. Okay, so this semi-variable cost and semi-fixed cost, they are triggered as one goes beyond the relevant range. Now, this concept of the relevant range is a concept to be internalized in this module and going forward. So in case you don't know what is the relevant range, go back, study it, and understand it. Because you will have to find yourself explaining to the marker that this cost will stay the same within the relevant range. If you say this cost stays the same, a fixed cost is a cost that does not change. It's wrong. That does not change within the relevant range. All right, now let's say one goes beyond the relevant range. Then our costs can behave as either semi-variable or semi-fixed. Let's go and find out what type of costs are those. Semi-variable costs. Semi-variable costs or semi-variable or mixed cost. Now, when you say semi, it's half this, half that, is it? Half this, half that. Not half per se in that proportion, but we are saying that they contain both the characteristics of being fixed and being variable. The mixture of costs include a fixed amount within a relevant range of output and an amount that varies proportionally with output changes. Like maybe, okay, let me read here. Telephone cost, for example, is usually semi-variable because the line rental is fixed, while the call charges vary. Right. When we talk about those landline phones, those landline phones, Telkom, let's say, is the service provider for the landline phones. So if you've got a Telkom landline, they will charge you that for us to maintain this line, we want per month 5,000. This is fixed, right? Plus, there shall be a charge for every call made. There shall be a charge for every call made. There will be a charge for every call made. So if you make 2 calls, maybe they then tell you how much it will be, a cost per call per minute and stuff like that. So now, what do we have now as far as the telephone cost is concerned? We have got a hybrid cost because it is made up of fixed and variable element. So what do we call that cost now? We call it semi-variable cost, or it's a mixed cost. So this cost, for instance, it will never go beyond 5,000. Let's say you don't make a call in that month in question. You still have to pay the fixed portion to Telkom. Right. Depending on the number of calls. Another example is an equipment maintenance cost. In any given period, the total maintenance expense can consist of a routine, preventive maintenance that takes place irrespective of units produced, and the maintenance that occurs after every, say, 1,000 hours of production or units. The latter is dependent on the volume manufactured and varies with hours or units produced. So now understand the issue of semi-variable cost. It is a cost that contains both the fixed element and the variable portion. Example, telephone line. I don't know about electricity. I don't know about water. Water also, if there's a fixed portion and a variable portion that depends on the number of liters that you use in that month, that would be an example of a semi-variable cost. Now, when it comes to semi-variable cost, good people, and these ones, when it comes to semi-variable, and semi-fixed, semi-variable especially, they present a challenge to the cost accountant because now he doesn't know how exactly to you handle such a cost, but it shall be covered later. I will show you there. When we do our high-low method and other fun stuff. Right, semi-variable, it has got fixed element and a variable element. We go to semi-fixed or stepped cost. You need to understand this one carefully so that you can distinguish it from the semi-variable one. Otherwise, your definition for the two, it shall be mixed. Semi-fixed or stepped cost. Certain kinds of fixed costs increase. So certain kinds of fixed costs increase or decreased only in fixed increments or in steps. When I spoke about that company that was having an output, a relevant range of between 0 and 15, if they increase the output beyond 15,000 units, there is an extra rental cost that will be incurred in keeping, in housing those additional 2,000 units. In that case, the rental, we shall say it is a semi-fixed or it is a stepped. Right, semi-fixed or stepped. We are going to say that this cost now is like this, good people. Right, so here you can have maybe volume, and here you can have your cost. Maybe your cost is there. Maybe between 0 and 15,000 units, your cost will stay fixed at 100 Rand. If your volume increases beyond 15,000, this cost will increase also, maybe to 120. And the level off for the next coming 5,000 units, taking us to 20,000. And if you go beyond 20,000, the cost will further increase, maybe to 130, to go up, and it will level off for the next coming 5,000 units. So a cost that behaves in this nature, fixed to a certain extent, thereafter, it will react, it will increase, it won't go down. Right? If you reduce your output to making 0, you still pay 100 in that case. So this cost, we say, a cost that is fixed, but will then increase as output increases in like batches like I showed there, would be referred to as a stepped fixed cost. Let's get to the definition now. For example, a manufacturer's current production capacity at the cost of 15,000 per month, okay, it's fixed like that, is 10,000 units of product, and the forecast demand is 12,000. The organization need to increase its capacity by 2,000. Now they are saying this person is currently paying a fixed cost of 15,000 when they produce within 10,000. And now there's been a forecast demand of 12,000, meaning that now they have to push their capacity to beyond the relevant range. We have to have now extra 2,000 units. The organization need to increase its capacity by 2,000 units by buying an additional machine. You see now? Now they have to buy an additional machine. However, the new machine's capacity is 5,000 units, but only 2,000 units are required. The monthly operating cost of the new machine is 3,000. So the monthly operating cost. So now we are going to bring in another fixed cost because we have to increase our capacity. We are operating nice at 10,000 there, incurring a fixed cost in terms of operating a cost of the current machine. Now that we have to push our capacity to beyond what we are capable of producing now, we need to buy an additional machine. And when we buy that additional machine, it will come with its own cost, come with its own operating cost, pushing our fixed monthly operating cost a little bit upwards, and we level off like that. The cost to produce the 10,000 units is therefore 15,000 per month, and units 101 to 15,000 will be produced at a cost of 3,000, irrespective of they give us the contents there. So that's an example of a stepped cost. So for understanding there, keep this in mind. Make sure you know it. All right, someone is calling. Let me assist them. All right. There we go with your fixed, with your semi-fixed or stepped costs. There we go. Be able to distinguish. All right, don't forget why we are here. We're here talking about the classification of cost according to behavior. So it's done there. Back to the next classification. Okay, so this is the concept, it's not a classification. The next classification is the classification as product or period cost. Our cost can also, classification number 3, classification of costs as product and period cost. It's another classification, right? So now, if you've got a cost there, according to this, they say you can classify it as either a product cost, of which you now know what is a product cost, or a period cost. That's another classification there that we have. Okay, so now if we are going to classify our cost as either product or period, how does this classification work? Right. We have done this one, that these are also known as AKA, also known as manufacturing cost. And these manufacturing costs, you already know them. And these ones, we have also spoken about them, that they are not included in what? In the production of goods. So they are referred to as non-manufacturing cost. Non-manufacturing costs. So this classification, it can twist your head because we had covered all these things and now we come back to cover them. Yes, that's how it works. And some good examples here, we've mentioned them. Marketing cost, admin cost. Some good examples here, we've mentioned them. Direct material, direct labor, manufacturing overheads. Any cost that is incurred in the factory, it will go there. And the cost that is not incurred in the factory, it will go there. All right, right. So we can be given a list in the exam to say classify this cost as either this or that. Not the classification. Okay. Either this or that. Okay. Well, you won't be able to see me, you see my screen. Right. So we've covered that one. Product cost taken into account in the product. These ones are non-manufacturing cost. Sharp. Some small activity there that will allow you to take a step back and think a bit. I may say it's about thinking. It's about thinking outside the box. All right. Classify the following items as either product cost or period cost. The material is forming part of the product, hence the product cost. Marketing cost is not incurred in the factory, hence the period cost. Salary for the secretary, for the HR, do you find here in the factory now? It's a period cost. Salary of the machine operator. The machine operator will be in the factory where manufacturing takes place. He'll be making the products, hence the product cost. Okay, sharp. Another small activity there that we have is a fixed, variable, and semi-variable. Classify each of the cost as fixed, you put F, variable, you put V, or semi-variable SV, according to the number of units produced during the month. So now, this classification, we tie it to the number of units that are produced. Number one, they say a factory supervisor's salary. Will it respond to the number of units produced? No, hence it is fixed. The supervisor is not paid per unit produced. He receives a fixed salary there. The paper used in the textbook production, Now this paper will be the material for the textbook. And as such, it's going to be variable. As we make more books, as the output changes, the number of books changes, we need more paper. Factory insurance. Factory insurance is fixed. Normally, the insurance company will tell you how much you are paying. They won't say you are going to pay this much for every unit paid, manufactured. No, they just give you a charge. D, the screws used in the furniture production. Screws used in the furniture production with respect to number of units produced. As more furniture is produced, more screws will be needed. That makes it a variable cost. The rent on the factory building is fixed. The piecemeal wage is paid to workers assembling a product. Piecemeal, if you are doing a piece job, you are paid for the output that you did. So if these guys are paid piecemeal, they are paid for the number of units produced. If they produce more, the wage will increase. So this becomes a variable cost. Uchi, the routine monthly maintenance of a machine and 3 callouts for breakdown. So now what happens is that if you've got a routine maintenance from those guys that maintain machinery, there is a fixed fee that they will be charging you. But if you make a random, call them and say, there's been a breakdown, please come, there shall be an invoice for them to attend to that breakdown, making it a semi-variable cost. It is fixed for the monthly agreement, then increases for every call out. The wood used in the production of furniture. As we increase more furniture output, we increase the demand for wood made. Hence, that makes it to be a variable cost. All right, we have been introduced to costs. We have done what we need to do. You can do any other thing that you might need to do, some activities there that I'm leaving for you to do, which is cool. Right now, I want to go to start unit 2. So internalize this theory, good people. We need it for subsequent. Now I want us to talk about start unit 2. Start unit 2, good people, is going to talk about estimation techniques. Estimation techniques and the linear equation. Now I'll tell you, why do we have this? Estimation techniques and linear equation. So now this, we are estimating what? Estimation of costs. This module is about what? Costing. All you see should be the cost. All right. Now, the cost that we estimate normally are those that are mixed, right? Are those that are mixed. The ones that are not, that can be assigned, they are very easy. You assign them to the respective particular thing, and it's done. Okay. Right. Now, how many techniques do we have? It's here. And how do we use them? Oh, I have to share the study guide. Do I have it here? This is for last semester. Last semester. All right, I want to share the textbook there so that you see these estimation techniques. That's when we have the concept of high-low method, which must be done before the class ends, because first day of class, a student must come out knowing how to classify cost. A student must come out knowing how to separate costs. Then you say, I attended class. Right? This, good people, don't kill yourself now and maybe try and say, closing your eyes and trying to claim that a classification according to this, according to just knowledge for consumption and understanding. There are more serious things that will be covered subsequently, like the ones that we're about to start on. But it is important that you understand your cost there. We don't sport here, good people. We teach everything so that we can respond to any question. These days, your university is unpredictable. They can bring anything that can cause havoc. Something that they've never tested in years. It can appear. Right, estimation techniques. We are estimating cost, good people here. And these are estimation techniques that are used, right, for the purpose of this module. We've got the linear equation. We need to know what is it used to estimate. We have got the high-low method. Your friend there, he shall follow you into the exams. He shall follow you to assignments and beyond your studies, your undergrad to degree. Then we've got the scatter diagram. This don't have to worry about it. If they bring it, it's limited to the assignment. In the assignment, I will assist you. Simple linear regression, not in the syllabus much. Also familiarize yourself with it partially. I'll show you how to do it using a question. So now these are the estimation techniques for your cost. The first one, good people. They say the linear equation. Estimation techniques or models can be used to project cost at different levels of output by employing the following linear equation. So the linear equation, it is used to project costs, to say what will be the cost when the output varies like this. So this is an equation that is used to project cost. And I'll show you how it's done. So now this equation goes like this. It says y being the total cost, is equal to A. You see, A is not attached to anything. It is independent. Hence, we call it fixed cost. If fixed costs, they do not depend on any level of output. They do not depend on any level of output. You can see there that A, it is on its own. Then you have got UB. UB is the variable cost per unit of level of activity. So that's why we say BX. X is going to be the level of output. So now when we say BX now, we are referring to total variable cost. So total variable cost is equal to variable cost per unit, which is your B, multiplied by the level of output, which is your X. So now, if you're armed with this equation, if you're armed with this equation and you have determined your A, you have determined your B, you can calculate the total variable cost, the total cost for any level of output by substituting for X. So what is the linear equation used for? It is used to predict cost at different level of output. So if they say, give you all the information, and then later on they say, calculate the total output cost, calculate the total cost for making so many units, they will be saying, apply your linear equation. It is the one that is used to predict cost. So what do you do to use your linear equation? You first have to determine your fixed cost, and you need to get your variable costs per unit. Then you can substitute in that, right? Having said that now, that's your linear equation, it ends there. Now, then we go to the next concept, the concept of the high-low method. Your friend, you will see it. A high-low method, what is it used, this one? High-low method, good people, it is a method used to calculate variable costs per unit if total costs are given. If total costs are given. So, in high-low method, we are saying that now it is going to be used to calculate variable cost per unit. If before you, they give you the total variable cost, they present you the total variable cost, you are required to calculate, sorry, they give you total cost. Total cost, we are saying, it comprises of fixed and variable. So let's say you are given a total variable cost, then they ask you to calculate the variable cost per unit. You are given total cost, meaning that they comprise of both the variable and the fixed element. And then they ask you to calculate the variable cost per unit. You are going to use the high-low method to split. You'll see how it splits. Now, because it is used to calculate variable cost per unit, you have to keep this in mind. The formula for that is going to be, using the high-low method, variable costs per unit. You use it only when you have got mixed cost before you, is equal to difference between the costs at the highest and lowest level of output divided by difference between the highest and the lowest output. All right, the output, good people, is measured in units, and our costs, they are measured in rands. So numerator is going to be the difference between the rand amounts. Denominator, it is going to be the difference between the level of output. So they are going to give you the total cost and the different level of output. Then they ask you to calculate the variable cost per unit. Right? Yes, that's what is going to happen. That's what is going to happen. Okay, I'm still using the start guide for last year, right? So it's fine. You can just identify where this is, and then you go there. I'm yet to get that one from you guys. You haven't given me. All right, so I want you to take, what you take home out of this class is the classification of cost and the estimation techniques. So now I am going to take you through the use of the high-low method, okay? How you are going to apply it and how it is interlinked to what? To the linear equation. So to enable me to do that, I am going to do a question with you guys before you go. Right, now, it would be something like this even in your exam. Sometimes it might need application. You need to pull out the information from a whole paragraph and calculate whatever needs to be calculated. Now I'm going to do this with you. A, use the high-low method to determine the variable cost per unit and the total fixed cost. Right, variable cost per unit and the total fixed cost. All right, so what is going to happen is they will give you the total cost, right? And you split the total cost and get the variable component per unit, and then you can do the rest. I will show you how. Right, Duplex Limited incurred the cost as indicated below during the 6 months and the 30 June. These costs changed, but not in direct proportion to volume. These costs changed, but not in direct proportion to volume. So if something is changing, but not in direct proportion to volume, it means that it is not a variable cost per se, 100%. Because if it was changing in direct proportion to volume, we know how it's a variable cost. So divide the total variable cost divided by the number of units produced. But if it's changing, but not in direct proportion, we are saying that now there's some distortion inside there involved, meaning to say that the cost now could be a semi-variable cost. It contains both the fixed and the variable element. So what do? We then apply our high-low method to split those costs, get the variable element and the fixed element. Then you can respond to the answer. So we have been told to use the high-low method to calculate the variable cost per unit, number one, and the total fixed cost. So here is your formula for variable cost per unit, right? I said that it is the difference between the highest level and the lowest activity. It is the difference between the cost at the highest and the lowest level of output divided by the difference between the highest and the lowest activity. The activity is measured in units and our costs are measured in rands. So we come here, using high-low methods, you need only to identify 2 levels of output, the highest and the lowest. The output, when we talk about output, good people, or activity, we are talking about the number of units. So I'm going to come here, I will look here and identify the highest and the lowest level of output, and I indicate them as the activities that I need. The rest I disregard using the high-low method. I check there. Now, the highest level of output is gonna be 106. I need also to identify the corresponding cost, because I will need that. And the lowest level of output is 95. Now, using the high-low method, all the other activities, as long as it's not the highest, not the lowest, it does not matter. You don't need it, only need 2. The highest and the lowest level of output, you deal with those and their respective cost. Now, using the high-low method now, my variable cost now, using the high-low method, my variable cost will be equal to the difference between the cost, here the cost in the highest and the level of output, the highest and the lowest level of output. Now, when you are saying the difference, you are simply saying, what is the difference? I didn't say this, what is this minus that? No, the difference between a 4 and 7. The difference is 3. But 4 minus 7 is equal to minus 3. My formula says the difference. So I simply get the difference between the two. The difference being, I can take the highest and separate the lowest. 2060 minus 1950 divided by the difference between the lowest and the highest level of output, divided by the highest. We start with the highest there, you see. Highest. So highest amount there. The bottom also, we take this one. 91, right, and 95. So my answer would be 2060 minus 1950 is equal to divided by 106 minus 95. My answer is 10 Rand per unit. We need to hear that because I divided the Rand amounts by the number of units. The output is Rand per unit. The output is Rand per unit. Right. Now, for you good people now, we have answered the first part. That's the variable cost per unit. Now to get the total cost per unit, remember, these are the total cost this side, right? The total cost. Now, what we know is the variable cost per unit is the same in all those cases. So now what are you going to do there, good people, is very simple. We will apply our logic. Allow me to erase there. We apply our logic. You can take one level of output. Take one level of output. I'm going to take the highest and say that the total cost, the total cost, meaning fixed plus variable, is equal to 2060. Right. Now that I know my variable cost per unit, I can take out less variable cost in total. I can take out the variable cost. Then what remains is going to be the fixed cost. It's logic. There are two things there. There are two costs involved there. If I take out one, I remain with the balance. Right. So now my variable cost per unit, good people, is 10 Rand. How many units were manufactured? It's 106. 106. So the variable cost included there amount to 10 times 106, amount to 1060. If I separate then my variable cost from my total, I get the fixed cost. I get the fixed cost. So that is the application of logic, nothing to cram there. Another student can simply say, all right, we are given that the total cost are this, and we met 95 units. So for variable cost total, we say 95 times 10, 105, it's here. Right, 106, the total variable is 106 times 10, which is 1060. And we all know that now the cost comprise of variable cost and fixed cost. Now that we know the variable element, what is the fixed element? Question mark, or you put X, the one that you are taught, let me use question mark, or X would mean the level of output. You simply say fixed cost is equal to total cost minus variable cost. Right, when you are calculating the fixed element, after calculating your high-low method, good people, you will substitute in either the highest or the lowest level of output. Don't say after getting 10 Rand or after getting your variable cost per unit, you then say, I'll go and pick any level of output there. It should give me the same answer. No, use either the highest or the lowest in determining your what? Your fixed element. There. So that's what you do with your high-low method. Identify the highest and the lowest level of output. The rest don't matter. Right. Then we come to B, good people. Formulate a linear equation that explains and predicts cost behavior. Right. A linear equation, yet we know it. This is the linear equation. Right. They say formulate a linear equation that estimates and predicts cost. It says Y is equal to fixed cost plus variable cost per unit times the level of output. So Y is equal to, now good people, having calculated what is your fixed cost, you then substitute 1000 plus B is the variable cost per unit. You calculate it using the high-low method plus 10x. So now this becomes the equation that predicts costs. With x being the level of output. If you want to calculate the cost of producing 1 unit, substitute in x, put 1. If you want to calculate the cost of making 2 units, make x be 2, etc., 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 until you are done. So that's how you formulate the linear equation. Just get your fixed cost, just get your variable cost per unit. With x will still remain as the unknown level of output. So that was the equation there. Now in B, we are now saying, now forecast the total cost if an estimated 110 units are to be manufactured in July. Now we want to forecast our cost, right? In forecasting or predicting cost, you use your high-low method. to get your variable cost per unit. And then you work out the fixed cost. And then you formulate your linear equation, the one that is used to predict cost. After that, you can predict any cost. In C, they want us to predict the cost of making 110 units. So I'll come here and say Y is equal to fixed cost plus variable cost per unit. And we intend to make 110 units. So what is the total cost now of making 110 units? It is going to be what? 2,100. All right. So that's that. As far as the first few learning units are concerned, as far as being introduced to this module is concerned. Right. Now that you are armed with all the definition of terms, now that you can do the splitting of costs, going forward now, you'll be now applying this. The high-low method will no longer be a core, but it will be now incorporated in other principles. So get it. That's why we don't skip and do that much in MAC there, because some principles that are learned before are used later. I hope we understand. So there is a lot to do going forward. etc. If you're interested in this class, if you're interested in passing, you simply join us. We take you through everything. We give you all the structures and how to approach any question so that you pass your MAC, then you move on, isn't it? This one, I'm not saying what or what, but I suggest you attend classes. Yes, we all intend to try and save money, but sitting in your corner alone and trying to know these things, it can throw you off. You have problems. You can make the attempt until you write without having finished the syllabus. Remember, there are 2 study guides to go through. We'll take you through that. You'll pass. You'll be the first to fail from our classes. It'll be a record. So, I've shown you the way, how it's done, and the expectations. All right. All right. All right. Don't worry about the scatter diagram there, people. If you want to study going forward, then you can apply the principles going forward. CVP is going to be the next topic that we look at, cost volume profit analysis. Right. How do you maximize profit, etc. We'll go together, good people. Once we finish study units, the first study guide, there are 2, remember, you'll be ready to pass. We've been doing these things for years, good people. You will pass, don't worry. All you have to do is just to present yourself to the class, listen, take notes, and we work out the examples together, right? So we promise to provide you with tutorials, assignment assistance here. Now, I'm not writing for you, but it will be assisting you. We don't want plagiarism and revision, and eventually you go and write and pass. Right. So thank you, people. If you've got questions there, you can post them in the group. From time to time, I will respond to them. I will be responding to them. Those who have got study guide, please share it in the group there. We'll be together. It's a semester module. We write in June, we pass. We would have been taught everything by then. So don't worry. You can go and drink. We are together, good people. And leave that to me. The job is to present yourself to class, and you don't even have to drive to come to class because it's now online, turning on your phone, and that's it. All right, the details about the classes, I'm going to share them in the group there, good people. And other things, we'll communicate through the groups. All right, I will share the details about the registration. Oh, they are already shared there, good people. Just go through those registration form there, and there is the timetable as to when you'll be attending here. It's going to be a simple exercise. I don't want you to make it a monster to say people should suffer because you're told that MAC is difficult. No, I'll explain the principle. People say MAC is difficult is because they are not able to explain the principles. What are the classes that we offer? They are also there in the timetable. Open that timetable there, you see all the classes that we offer there, right? And if the one that you want is not there, then you can contact me. Maybe we could have skipped it by mistake. We could have skipped it by mistake while we do provide it. So all right, thank you, good people, for coming. Welcome to the MAC. It's a simple module. So sharp. I'll also share the recording.